This is Jason Matthews, your financial guru. Today, we're going to give you guys 5 tips on what you could do with your tax-free refund. Now, before we get started, hit that subscribe button. So first and foremost, let's really talk and really dig in what a tax refund is. A tax refund is when you overpay the government throughout the year and they're refunding the money that you gave them back. And on average, people on average in America is getting about a $3,000 refund. Now, the disadvantage of getting a refund is this. You gave the government $3,000 and you're not getting interest on it. But if you do not give the government all their payment by their due date that they have assigned, and then they charge you interest for it. It really is something. So when we think about refunds, we should not just think about, oh, I get this money. No, this is your money. So before we really dive in and get really deeper on what you should do, what I recommend you to do is look at your W-2s, figure out how much, make some adjustments for this year so you don't get a tax refund. I'd rather have that money in your pocket now, use it for emergencies and other things you might need throughout the year instead of getting that refund. But with that being said, let's do a couple of things and talk about a couple things you can do. Number one thing America have is pay off credit card debt. Right now, the average credit card rate that Americans are paying are 17%. Now, imagine if we just use that $3,000 to lower our credit card bill. It can help us out for the long term, which is really be fantastic, instead of paying $17,000. A better way of looking at this is this. Let's say you have a $10,000 credit card limit. You raise it up to $10,000. You're going to pay an interest on that $10,000, $1,700. There's a whole lot of things we can do with $1,700. So let's go ahead and put that money down for a tax refund that way. Number 2 thing we do is contribute to a Roth IRA. Now, a Roth IRA, the good thing about Roth IRA is that money grows tax deferred when we pull it out tax free. Now, oftentimes when we hear IRA, we think about for retirement, but this can help out a couple of different things. A Roth IRA can help us if we're a first-time home buyer with the first $10,000 in it. If you're using it for higher education for you or your kids or even your grandkids, you can use a Roth IRA, pull out the money, pay for the higher education down the road. But you can do it for if you get disability or sick. But this is a great way to build some type of wealth and a retirement strategy for us. Now, with a Roth IRA, the max you can put into it if you're below the age of 50 is $6,000. And if you're over the age of 50, it is $7,000 you can contribute towards it. But the downfall of it, or we should say, is there are limits on how much income you make. So if you're a single person here in 2020, if you make over 124, you don't qualify for it. And if you're a married couple, you make over 196, you guys are not eligible for that. The third thing we could do with it is put up emergency savings. This morning when I dropped off my son, a lady tire popped while she was driving and she pulled over. She did not expect her tire to pop. And oftentimes we have emergencies in life and we don't know when the next emergency is going to happen. So what we need to do is, we know emergency happens. We know life never go on a straight line. We know things are going to happen. So we should have the proper amount of emergency savings. For the average person, we need 3 to 6 months worth of savings. Because we never know when our roof leaks, car breaks down, so on and so forth. So with that being said, let's put that $3,000 to use. Let's put that in our emergency savings. So the next time we get an emergency, we don't go back to credit card debt because we already have the money saved in our emergency savings. The fourth thing is contribute to our cash value life insurance. Okay. Now, oftentimes when you do that is you're going to have to make sure that you have a life insurance, a cash value life insurance policy that is designed for cash accumulation. There are life insurance policies that are designed for death benefit. But if you have a policy that's designed to build up cash, this might be a great place to park some of that $3,000 and to put an extra contribution towards this policy. Now, before you do that, you need to make sure you talk to your insurance company, or you need to talk to your insurance agent to have them make an illustration first and foremost to see how that money is going to grow. The second thing I will be wanting to know from that is, what is the max I can contribute? Your contributions is different from your Roth because it's not based off your income limits or on your contribution limits, but it's based off of your death benefit limits that the IRS provide. And if you go over that threshold, the money you pull out of it now will be considered taxed like any other retirement account. So we want to be below that threshold. Last but not least is we want to get an HSA account. And what I mean by HSA account is a health savings account. Now, the money we put in our health savings account is great. It's for somebody who has a high deductible health plan. Maybe you're healthy, you don't pay a lot of medical expenses, so you should look at getting a health savings account. Now, the money you put in there, you can invest that money. And that money rolls over year after year after year. Different than a flexible spending account where you have to spend that money by the end of the year. Now, the great thing about that is, as that money grows and invests, you could use it during retirement. And we all hear about how expensive healthcare costs is for retirement. So we know that's going down the road. Let's go ahead and park that money into our health savings account. Now, if you have any other questions, make sure that you email us at matthewsfinancial@gmail.com. Give us a call, 510-229-7608. But more importantly, make sure you subscribe. Give us some hot topics that you would like to hear. Hope everybody have a great tax season. Talk to you later.